We have Nagaraj Shetti, Technical Research Analyst at HDFC Securities, joining in now. Nagaraj, good to have you with us here. It's a pretty red-looking screen out there. So immediately, what levels come to mind, and any observations on the headline indices first?
Yeah, hi, good morning. Nifty has been in a sharp downtrend over the last few sessions. And recently, over the last three sessions, we have been witnessing a selling momentum is taking on. I'm expecting this downside momentum is likely to continue for some more period. And we know that technically, we believe that supports are tend to be broken one after another. And I'm expecting the nearest support to be taken is around 18,800, which happens to be a 200-day EMA, which is very crucial support. I don't say that this support is going to hold and we are likely to see upside bounce, but technically saying there is a support at the lower levels, and having declined from the highs continuously over the last few sessions, indicators become oversold, and we may see some consolidation or a support taking for the indices at the lower levels, something around 18,800, 750, 800 odd levels.
18,800, 18,750, got that, Nagaraj. But what about the Nifty Bank? That's taken a harder knock. Now that's just broken 42,500. What's the support level out there? Is it nearing some kind of support, or do you expect it to see a sharper correction?
The similar kind of a movement we have seen in the Bank Nifty as well, in fact, more severe than the Nifty. And I'm expecting there is no, though Bank Nifty has declined much in the last few sessions, there is no indication of any clear-cut reversal as of now. So 41,800 to 41,600 is going to be the next support for the market for this banking sector. And I'm a little doubtful whether we could see some significant upside bounces from the lows or not, because the overall trend structure of the market from the smaller to larger time frame, including Bank Nifty, has damaged and turned into a negative. Overall indicator chart pattern is showing weak bias. Then the momentum is happening on the downside. So more weakness is likely for the Bank Nifty, and the next support will be around 41,800 to 41,600 levels.
41,800 to 41,600. So more weakness on the Bank Nifty. Are you seeing more pressure on some of the IT names? Because, even fundamentally, IT stocks are not doing that great in terms of earnings. But will that be another drag in terms of leaders taking the markets lower?
Yeah, of course, particularly if you look at the IT has been in a downtrend since past. If you consider the index from the 33,000 levels, where the IT majors are participating on the downside. Now, currently, the downtrend is likely to continue. This IT sector itself has broken below the important supports recently, and I'm expecting the IT major participants are likely to continue their downside momentum for the near term.
Okay, sorry, just one last word, Nagaraj, on the mid-cap index and the small-cap index. On charts, how are they looking?
Yeah, of course, it's an interesting chart pattern. Have you seen, if you look at the mid-cap and small caps over the last few months, and what you have seen, a significant upside momentum from the April to almost the month of September, October. After that, this has started to show consolidation. We have seen some phenomenal upside momentum in the mid and small cap without showing any reasonable downward correction. This cannot be continued for long. Exactly what is happening is the mid cap and small cap is turning into a sharp downtrend. A selling momentum is picking up in the mid cap and small cap. Just beginning, I think I'm expecting more severe correction is likely to come in prominent mid cap stocks and small cap stocks, which have moved up significantly over the period of time recently. And this momentum, the selling pressure is likely to continue for the both mid and small cap sectors for the near term.
Okay, thanks a lot for joining in. It is indeed a very weak start to trade. The Nifty has now given up on that 19,000 mark as well. 18,940 is where we're at. It's almost a 200-point cut on the Nifty as we speak, not looking good for the bulls.